Welcome to Conversations, a weekly audiocast featuring interviews with leading investment strategists and recognized financial professionals. Brought to you by the Market Technicians Association.
This is Conversations, the official MTA Podcast Series, and today's guest is Phil Roth. According to Roth, successful trading and investing entails taking a lot of small losses. Risk control is the name of the game. Phil Roth, a chartered market technician, was Chief Technical Market Analyst at Miller Tabak & Company from 2001 until 2012. He was a Wall Street professional for 46 years, having been the Chief Market Technician at Morgan Stanley, Dean Witter, Shearson Lehman, E.F. Hutman, and Loeb Rhodes. He is a three-time past president of the MTA and former director of the New York Society of Securities Analysts. He is currently Vice President of the MTA Educational Foundation. He is an adjunct professor in the Graduate School of Business at Fordham University and has lectured at Baruch, Pace, Columbia, Cornell, Georgia Tech, Howard, Ohio State, Pittsburgh, Rutgers, Seton Hall, Tulane, the University of Virginia, and the University of Richmond. Welcome to the program, Phil.
Good morning. How are you doing?
Very good. Thank you for taking time with us this morning. You have quite a long history in the markets, but your introduction to the financial market came at a very early age from an unlikely source. So can we start there? Can you tell me how you became introduced to the financial markets?
Sure. When I was 12 years old, I went to work for the local baker, starting by scraping the floor and washing pans. And after I was there a couple of weeks, he said, Phil, you know, you're wasting your money. From now on, we're going to invest it, and I'm going to give you a weekly allowance. So at the end of the day, he would wipe the flour off the bench and pull out his charts and show me how he was trading. As it turns out, all the bakers are interested in the stock market. I worked in the bakery for 8 years. I became a baker. And by the time I was 18 or 19, I had figured out that the bakery was a good source of cash flow, and you made the real money in the stock market, and that's all I had to do. Although in 1960 or 61, as an 18 or 19-year-old, you couldn't exactly buy a business because you were vulnerable to the draft. And, of course, I ended up going to college and being in the Navy for a while before I could get interested in the markets. But just to continue a little bit, as luck would have it, when I was in graduate school and tired of borrowing money, I said, well, that's it, I'm going to go to work. And I sent out a bunch of resumes to Wall Street and got just one reply. But it was enough because I got that job. That was at Merrill Lynch in 1966.
So you've seen a lot change in the markets over the years, and the first thing that comes to mind is back then charts were hand-drawn and today they're computer-generated. What do you think are the biggest changes that the markets have seen during your career?
Well, I was actually involved, believe it or not, with the very first computer-generated charts as part of an experiment at Merrill Lynch in the late 1960s. So I actually I was in the luxurious position of being the first person to look at computer-generated charts. And of course, it's changed the business dramatically. It's given technicians the ability to look at current information, lots of it, with just a touch of a key on a computer. But that's good news and that's bad news. I mean, the good news is for technicians, they're able to do some very precise works. But on the other hand, computers and access to charts by everyone has made people think anybody can be a technician. All you have to do is get in front of a computer screen, look at a chart, and draw a line, and you'll know whether you should buy or sell. And obviously that's not true. So we have many people that don't know what the heck they're doing looking at charts. That's not good. And secondly, it's actually hurt jobs because professional technicians 40 or 50 years ago, one of the things they did was draw charts, and they were the only ones that had them. If people wanted to see a chart, if a fundamental analyst wanted to see it, he had to go to the technical analyst. Now, of course, he doesn't. So the business is different. Technical analysis is much more a trading tool than an analytical tool because of the nature of the business. But I'd have to say that what has lasted is the interpretation of the charts. I mean, that hasn't changed. If you know what you're doing, you can make judgments about what's to buy and when to buy, and that remains we can call it a science or an art, but that remains the same skill as it was 50 years ago.
Now, you've been president of the MTA 3 times. You've clearly served our community over the decades. What are some of the significant hurdles that the MTA has cleared during some of your terms?
Well, first of all, let me say that I was president 3 times. That encompassed 6 or 7 years, I think. But I've been on the board for over 20 years altogether. Back in the late 70s, early 80s, we decided that the organization, some of us decided that we needed to be certified. We needed to be certified like the fundamental analysts. We needed to create a program like the CFA for technicians. That wasn't an easy task at all. In fact, some of our members were appalled at the notion of being tested by their peers, so it took us 3 separate votes by the members before we got more than 50% of the members agreeing to go through the certification program.
Really?
So I was president, and I was chair of the testing committee, and so the biggest thing was getting the member to approve the notion and then writing the test. We wrote those tests by hand ourselves. We knew nothing about testing. We learned it. Ultimately, we turned it over to professionals when the program started to become successful. But clearly, the CMT program has been the most important thing the MTA has done.
Now, on behalf of those of us who have come in decades later, we thank you for that work. I had no idea it was a struggle to even get that approved off the ground. And I know it's certainly valued in the industry today. This year, being 2013, celebrates the 40th anniversary of the MTA. We've done a fair amount of looking back at the history of the MTA. I know at the symposium this year we did that. Can you tell me what you see in the future for the MTA?
Well, I think the business has changed drastically since I entered the business. When I entered the business as learning technical analysis in 1966, most of the members of the MTA were professional technicians employed by major brokerage firms writing research. And there were lots of us doing that. When I was at Merrill Lynch, we had a dozen technical analysts. They have 2, I think, today. The business has changed dramatically. Because of the drop in commissions to extremely low levels, brokerage firms don't want to spend a lot of money on research, either fundamental or technical. And the drop in commissions has enabled anybody to trade the markets themselves and do the research themselves and execute their own trades for practically nothing. So I think the future of the business certainly is not on the analytical side, and not in research. We have to continue to do that, but most jobs for technicians are going to be on the management side. In fact, looking back again for a moment, the organization had to deal with that starting in the 70s. We wanted to broaden our membership. We would have died if we didn't change the membership rules from technicians who wrote people who use technical analysis, traders and money managers. So that's the direction we have to go. We also have to continue to upgrade the way people look at the analysis we do. We've got to get academia more interested. I would like to see as many people taking the CMT program as we do in the CFA program eventually. Obviously, that'll take decades, but I think that's the direction we have to be going. And I think as the program, CMT program, becomes more popular, I'm hoping that academia takes more interest in it and does studies the way they did for fundamental analysis. Fundamental analysis became very popular because academia studied it. I'm hoping that technical analysis goes the same way, but we are not going to be doing that research. Academia is. So our traders and money managers using technical analysis are really going to be depending on help from academia.
Well, I see in your bio that you are Vice President of the MTA Educational Foundation. Are you currently involved in this, in the academic world? I see you're an adjunct professor and you've done a lot of work at other universities.
Yes, the MTA helped get the foundation started 20 years ago. We are affiliated with the MTA, the foundation. We get some funding from the MTA, but and the MTA president is a board member of the foundation. But we have certainly different goals. Remember, the MTA is a business not-for-profit. The foundation is an educational not-for-profit. The goal of the foundation is to get technical analysis accepted and taught on the college campus, and that's what we have. That's what we raise money to spend on to send teachers to colleges, and it's a long process. Getting in the door. Sometimes we can do that by speaking to student groups or trading groups. Our goal, of course, is to get professors interested enough to bring us in and speak to their financial classes, and ultimately the goal to teach an entire course in technical analysis. The foundation put a course together about 10 years ago. We've updated it a couple of times. We're going to continue to work on that. It's an introductory course, and I have taught that course at 10 years at Fordham, and I've spoken for some of our other teachers and a lot of other colleges as well. So if our listeners have any affiliation or close affiliation with the college they went to or know about and can get us some contacts, that's what we need. I would be glad to hear from you, and we'll try to get something going at other schools. I'm going to Hofstra in a couple of weeks here in New York. We've spoken there a couple of times. It's looking like we might be able to do something there. It takes a long time. It takes years in some cases to cultivate the college enough to get us in the door. So we have patience and we have skills, and if anybody is interested in teaching as well, please get in touch with us.
You said the foundation is partially funded by the MTA. How are the remainder of the funds raised?
We have several fundraisers over the course of the year. We have one coming up on November 14th. It's at Baruch College in the evening. That fundraiser has two aspects to it. It runs from 5 p.m. to 9 p.m. From 5 to 7, we have a silent auction and refreshments served. In the silent auction, we auction off books, tours, memorabilia, anything that we think will be of interest to our audience. And then the second part of the fundraiser is a a presentation by Wall Street professionals. And we've had traders, analysts, strategists speaking. This year we're having mostly managers. The MC is Mike Santoli. I'm sure you're familiar with him. He's right now writing for Yahoo Finance. Our speakers are Robert Axe of Citadel, Andrew McKnight of Fortress Investment, Jerry Parker of Chesapeake Capital, Russell Rhodes, who's with the CBOE. These gentlemen will give their current views of the market. We also have another fundraiser once or twice a year where we'll get technicians to volunteer for our Take an Analyst to Lunch or Dinner program. So we have an auction where people will bid on analysts, as you've heard that Warren Buffett has done. And we'll get a couple of dozen volunteers and have it in different places, a lot in New York, but all over the country, wherever the speakers happen to be. And so if you're interested in meeting some of the biggest names in the business, just keep an eye on the MTA website for announcements on that. Our website is mtaef.org.
All right. Well, I always like to give the guest the last word, but I've also found that retired technicians don't hold anything back when they're given the floor. So I'll brace myself here and ask you if there's anything you'd like to add before we go.
Well, yeah, since you're bracing yourself, I'd like to say that I'd like to say that there are technicians that give technical analysis a bad reputation. So nothing has bugged me over the years more than people who pretend to have crystal balls. You know, the question that CNBC asks every technical guest is, where's the Dow going to be at the end of the year? I cringe when I hear that. It's a stupid and useless question. Nobody knows the answer, but the guest is forced to commit to that. You know, technical analysis is all about managing risk and changing our opinion when conditions change. So rather than having some target chiseled in stone out there for a certain date, all we can do is look at things today and make a decision. In fact, I want to relate this one story. When I first started in the business in 1966, I was in the technical department at Merrill Lynch. Robert Farrell was the manager of that department, very famous technician, now retired. Every day we'd have a morning meeting, and every day he'd ask around the staff, what do you think of the market? What do you think of the market? And one of the members, one of the junior technicians said, Bob, if I understand you correctly, you're saying that we're predicting the Dow Jones Industrial Average is going to be at X on a certain date. And Bob said, what? We don't predict. Jean Dixon predicts. Now, I know my audience doesn't know who Jean is anymore. She's been dead a while. But Jean Dixon was a fortune teller. So my friend says, we don't. Well, what is it that we do? And Farrell said, we assess the trend and advise the appropriate action. And that is what I've spent 46 years doing.
Phil, it's been a pleasure. Thank you for your time today.
You're welcome.
Today's guest has been Phil Roth, and that concludes today's MTA podcast from LexingtonCapitalLLC.com. I'm Lance McDonald, together with recording engineer Shane Skwarak at the MTA, reminding you that price is always right.